The intrinsic value of virtual assets is built on trust. It is trust that gives value to both things. One of the biggest differences between general virtual assets and fiat currency is whether or not there is a state guarantee. Currencies secured by the state are exchanged for goods on the premise that they are reliable. The moment trust is broken, money becomes a lump of iron and useless and worthless. Nothing is permanent in the world. The same goes for trust and belief. There are even concerns about the virtual asset system collapse and pessimism prevails. But the evaluation of trust in virtual assets is changing. Individuals as well as nations believe in virtual assets. The value of virtual assets is still evolving. Even Bitcoin, the big boss of virtual assets, is faltering. Supporters are still showing off their strengths. In particular, the buying mean of MicroStrategy, which holds the largest number of bitcoins in the world, is strong. The company has been investing heavily in Bitcoin buying since 2020, led by CEO and founder Michael Saylor. The company has been jumping into buying more after the recent bearish market. Over the past 2 years, the company has been actively increasing the proportion of holdings of Bitcoin in its balance sheet instead of cash in the name of inflation hedging. In March of this year, this company did not hesitate to that, such as buying bitcoins after borrowing $205 million from the virtual asset bank Silvergate using Bitcoin as collateral. However, due to the sharp drop in the Bitcoin price, the company suffered a loss of about $1.3 billion and even faced a margin call crisis. He is showing his confidence in the value of Bitcoin by posting support posts on the Twitter every day. On June 7th, he appeared on CNBC's Squawk and said, all those who doubt and deny Bitcoin are wrong. Also, he confidently said that the price of Bitcoin would never go to zero and would go up to $1 million. However, there are mixed opinions about the value of virtual assets. Due to the nature of volatility, there is a high risk of sudden changes in value, so there are many critical views. European Central Bank President Christine Lagarde has pointed out that virtual assets have no value and there is no underlying asset that can guarantee safety. According to the New York Times, on July 5th local time, El Salvador, which introduced Bitcoin as a legal currency for the first time in the world in September last year, suffered a valuation loss of about 60% of its Bitcoin investment due to the recent plunge in virtual asset prices. On the other hand, there are also positive evaluations of so-called good coins, such as Bitcoin and Ethereum. On July 5th, there is a report submitted by the Bitcoin Policy Research Institute to the U.S. Department of Commerce. According to the report, Bitcoin and other virtual assets do not have bank accounts, so it reduces the burden on Americans who are alienated from the financial system and provides low fees. It also contains the prospect that it can help the national interest, such as attracting global talent and technological innovations. Virtual assets are asset classes based solely on momentum and ideology. However, some high-quality virtual assets, such as Bitcoin and Ethereum, are expected to survive. In the case of Ethereum platform, profits are steadily coming out, and in Bitcoin, the mining cost itself is intrinsic value, and these two coins are already recognized as solid assets. There are still not many standards for judging the risk of the virtual currency network. These are practically no set rules. It is just about checking the white paper of the project. Even white papers describe false partnerships or are filled with photos of the same person changing clothes. Since the standard for valuation itself is ambiguous, there are great concerns about potential risks even within the capital market. As the prices of cryptocurrencies plummet, concerns are emerging about companies investing in cryptocurrencies. These that must verify the reliability of the virtual asset are more difficult. It is not easy to detect the risk of the virtual currency project through the ledger. It is difficult for auditing accounting firm to verify the network reliability or issuance algorithm for each coin, as well as practical verification of the governance of the blockchain networks. In terms of cost effectiveness, there is not much factor to invest time and money in. Widely used virtual currencies such as Bitcoin and Ethereum can be useful if another tool is created for this, but the incentive to create a tool for small coins that are not is not great. Even if it is made, the coin may disappear when current domestic corporations often bring and apply tools from global accounting firms such as the United States and Japan, which are ahead of the preparation of virtual currency other tools.